Sick of chasing fast profits only to come up short? Ready to discover how to secure consistent gains whether the market's up or down? You've come to the right place. Hey traders, my name is Blaze from Blazin-Tradez, and today we're going to dive into my personal strategy that helped me secure over $10,000 in profit in just a span of a year. So buckle up and let's get into it. Using my 3 years of experience in trading stocks and options, I'm going to show you exactly how I approach the markets, identify setups, and lock in profits without staring at a screen all day. Whether you're new to trading or looking to refine your strategy, I'm giving you tools and insights how to swing trade successfully. So smash that subscribe button, hit that like button, and let's get into swing trading 101. When I sit down to swing trade, I focus on key concepts, which are understanding the basics, doing analysis, managing risk, sticking to a strategy, and controlling my emotions. I will break down these essentials that will help you be well on your way to building a winning swing trading strategy. Let's start with understanding the basics. Before we get into any charts, we need to understand what swing trading is. In simple terms, swing trading is when buyers buy or sell stocks or other assets for several days or weeks to take advantage of short-term to medium-term price movements. Now, I want to clarify, swing trading is not for everybody. I personally like it though because it gives me more freedom, avoids a PDT rule, and it still gives me a solid profit potential. It's perfect if you have a 9-to-5 job, are a student, or just don't want to be glued to a screen all day. Now it's time to hop into the charts and go through the fun stuff. So if you have a trading platform currently, I would say open it up, sit back and get comfortable since we have a lot to cover in a short amount of time. Now this is the trading platform I use. It's called Thinkorswim. I like it because of the tools and features that it gives you. One of the features is called On Demand. This allows you to backtrack your trading strategies and practice trading. This is what I'm going to be using today to go through some of my past trades and explain exactly why I entered and exited the market. There are 5 key indicators I use to make trades. There is support and resistance levels, MACD and RSI, moving averages, and chart patterns. Now let's go through how I use these indicators individually on past trades I've made. I start off by opening up Apple and finding its support and resistance levels. Support is like a floor where buying interest tends to increase, and resistance is like a ceiling where selling interest increases. This helps me plan entries and exits of a trade. You want to find a balance of support and resistance lines because too many can crowd the chart and not enough can increase the false breakout. The next indicator I use is MACD. This stands for Moving Average Convergence Divergence and is one of the main components of my trading strategy. Simply put, this is a way of signaling bullish or bearish momentum shifts and is a great indicator to find potential reversals. As you can see, when the MACD line swoops low and crosses in an upward direction below the middle line, it suggests a switch in momentum and shows a signal of buying an opportunity, and vice versa. Even though this is a main component of my strategy, I can't just rely on this because this is only one indicator and I need multiple indicators to agree with each other. On to RSI. This stands for Relative Strength Index and measures overbought and oversold conditions. I personally don't like to get into trades if RSI is disagreeing with my analysis, since it's such a powerful tool for showing price conditions, given it calculates in moving averages. Now on to moving averages. If the price is above the moving average, it often indicates an uptrend, and if it's below, it suggests a downtrend. This helps me when deciding entries and exits. Last but not least, chart patterns. This is one of the more complicated indicators since there's so many different patterns to use. Here's a sheet of popular patterns. I personally have done hours of backtracking these patterns and found a handful of them successful and smooth the trade. Some of my favorites are head and shoulders, double and triple bottom, double and triple tops, and lastly, bullish and bearish wedges. These patterns I find smoother and easier to trade, but I would definitely recommend testing them out yourselves and finding which patterns you like to trade the most. As I've said before, I don't trade if only one indicator tells me to, but instead I need 4 or all of them to agree on my analysis. Now I'll go through some other trades I've made and show you my process using the tools I explained.